Hey, what's good, y'all? It's C Will, and this is the Passive Income Network. On this podcast, we talk about investing in assets that produce passive income, financial literacy, and we definitely focus on innovative technologies. On this episode, we have a special guest that'll be here to, share some insights on what he does as a educator and investor by the name of Chris Vermuelen. Welcome to the show.
Hey, thanks for having me, C. Will. Great to be
Most,
here.
yes, for sure. Most definitely. So let's get it on the show. Can you tell the audience who you are and give them a little insights on your background?
Yeah, sure. So I'm located just north of Toronto, up in Canada. Kind of born and raised in an entrepreneur family, and I got involved in the stock markets when I was in high school, and it really became my passion. It became my video game, my kind of hobby, everything. So I've lived and breathed trading my entire life. Most people, got into all kinds of different sports and activities, and I've always just been kind of focused on the money. I don't know why. Maybe it's just my parents are entrepreneurs. My sister and I used to help my parents, deliver flyers from door to door, go to events and stuff for their businesses. So I kind of just grew up with that entrepreneur kind of brain. And how can I make money? How can I do something that, runs for me? And so I got involved in the stock markets and realized, hey, you can literally just click a few buttons, buy some stocks, and they can go up and you can make a ton of money. And so that was my natural lure. I'm kind of an introvert at heart. And so the fact that I could sit on a computer and just buy and sell things and never have to talk or deal with people, I was just like, this is perfect because I'm a super shy person naturally. So that's kind of where I got into it. And I ended up trading through college and I ended up making enough money through college to pay for it and was trading fundamentals originally. And I was back in 2000, 2001, kind of the tech bubble. And my first trade was in a company called Palm Pilot. I don't know if you remember those old little
I
phones with the
yes,
pen.
yes. Yep, yep.
Yeah, so I bought Palm Pilot and made I turned a $2,000 account into about $8,000 in 2 weeks, and I was like,
Wow.
that was my first real trade. I paper traded before that because I was only 18. I wasn't old enough to have a real brokerage account, and so that was my first trade. Which, having a huge win is great, but it also sets the wrong expectations. And so
Mhm.
eventually you need a really bad loss and you got to hit rock bottom, I think, for most traders and investors to realize, okay, I got to take this seriously. I need a trading plan. I need a strategy. I need to protect and manage risk, right?
Yep.
And so I kind of got into the whole just buying the tech bubble and buying fundamentals. Tech bubble burst. Even though I was buying companies that were growing quarter after quarter, the share price is still cut in half and kept on free falling. And that was when I realized, okay, this whole trading game of buying fundamentals and news does not work. And so I
Hmm.
kind of pivoted and shifted to technical analysis, which is following price charts, following momentum. Where's money flowing? Which asset classes, which pockets of different investments or sectors is money going to? And as soon as I did the pivot and shift from fundamental and data or news more so to just following price, everything changed. I was able to
Hmm.
create strategies and rules to follow, and that was a game changer because I could separate my emotions from what I wanted to trade and thought I should trade to I have to wait for a trading signal. I have to wait for something to be trending higher to get into it. And that was when everything really came together. And I wrote a book, Technical Trading Mastery, based around this, just following price charts and cycles and things like that. So that's where I am. I've gone over 10 years now. I don't follow the news. I don't watch the news. I don't listen to it. If there's breaking news, like my kids broke the news to me about COVID, they break the news to me about everything because I really don't like negativity in general. I don't watch negative shows. So the kids just, it's nice that I live in my own bubble because the news I find is all negative. But if you can get rid of all those other opinions and people inbounding you with negative and all this mixed messaging, things really clear up. And as a trader or investor, the only way we make money is if we're in position for the price to move in the direction we want, whether it's up or down. And it doesn't
Yes.
matter what the Fed does, doesn't matter what the news is or what the current hype is going on. We just got to follow price. And if you know if it's going up, down, or sideways, you can apply a strategy to that. And that's what I do in a nutshell is just follow price. I can look at the charts in seconds every morning and know if I'm going to have a trade today or if I'm still days away from a potential trade. And I found a strategy that is super passive, but is just active enough to take advantage of the waves that happen in the market every year.
Oh, excellent breakdown from high school to now. That's great. Because like that's something. I didn't start in the financial literacy space, so I created this show to help like educate me more and to meet professionals like yourself. So again, thank you for coming on the show. But looking back, that is something a high schooler should really know is about these markets. And then you made a great point that the news and everything is very negative, and it can definitely throw you off your game. So let's dive in more deeper into your technicals that you're talking about here. Can you kind of define, for one, let's talk about your book, Technical Trading Mastery. Kind of define a little bit what are technicals. It looked like you got a 200 SMA or something in the background
Yeah,
on your
yeah. So
chart.
that, yeah, there's a chart there if people are watching us. That's
Yeah,
actually a daily chart of the Nasdaq. That's a 50-day actually behind me.
50-day.
But I,
Okay.
but I do like to look at the 150-day.
Hmm.
I like to look at the 200-day. I like the 20 days, one of my favorite, and the 5 days. Those two are
Hmm.
great for trading. But long story short, a lot of people get into technical analysis, and as you probably know, there are like hundreds, if not like thousands, of indicators you can lay onto a chart.
Way too many. Hmm.
And most of those indicators are all based on the exact same data, price action. So they're all interpreting the price, that same data, differently. And a lot of them will say buy now. Some of them are saying sell. It's bullish or bearish. And you get this like analysis paralysis as all those indicators are fighting with each other. What I do, what I talk about in my book, Technical Trading Mastery, is that I like to peel the market back kind of like onions. So there's layers, and every layer is actually using a different set of data. So for
Yep.
example, I look at the price charts, and I want to maybe look at the moving average of those. So I want to know if price is trending up or down or sideways, if maybe a couple of moving averages are kind of crisscrossing over each other
Yep.
because it's just been going sideways. So moving averages are a good way to identify a trend. Is it up, down, or mixed? And then I like to look at cycles, which is based on a time frame. So I found the markets have these wave-like patterns. There's cycles, a lot of different cycles, literally between 3 days and about 120 days. There's different cycles that go through there. So I like to look at the markets also from a just time passing type of thing. And as you know, all markets are pretty much they're all linked in some way. It's called intermarket analysis. So if money is flowing out of the stock market, that money is going somewhere else. Is it going
Yep.
to bonds? Is it going to precious metals? Is it going to crypto? Is it going to real estate? So understanding how all the different markets are linked, if money is flowing out of, say, growth stocks and into utilities and gold and maybe consumer staples or something, those are defensive plays. No matter what, consumer staples, we're going to need toilet paper and toothpaste. So people feel comfortable moving, if we go into a recession, into the basic
Yep.
material stuff. Utilities, we're going to need electricity, water, no matter what. They pay good dividends. So people move to these boring, yet they think they're, safe haven plays, although they're truly not. When you get into a bear market, almost everything does go down. But understanding where the money's flowing, sloshing around between sectors and asset classes is another thing. That tells us the sentiment of the investor. Are they bullish? Are they bearish? Are they scattered and there isn't any clear direction? So the way I like to look at the markets is like, I'm a kite surfer. I live on the water. I'm a kind of a water baby. And more or less, I look at the stock market like the ocean. The tide is either going up or it's going down, which is to me a bull market or a bear market. Each requires its own strategy. If the tide is going up, we want to be looking to only buy long when assets are in favor. And think of, I call the strategy I use is called asset revesting. And we just keep reinvesting our money into the best asset at any given time. So I see myself as floating on the horizon, at a beach, a surfer. You see them just floating out past the break.
Yep.
And what are they doing? They're sitting there waiting for a clean set of waves to come, the next set. And you can see that set coming. And then you pick the one you want, the first, second, or third, which to me is like, do I pick this asset, that asset, or the other? There's usually a few assets with money rolling through. And we jump on the one that meets our criteria. We ride that wave through the markets. And the nice thing about a big wave when it comes through is you also know when it's starting to weaken, when you got to carve out so you don't get swallowed. And that's what we do. I literally float on the horizon with our capital waiting, and we move on to 5 to 12 waves that roll through the market every year through whichever assets that wave is coming through. And that's what we do. We cherry pick and wait for those high probability trades. And I don't believe in holding anything if it's going sideways or down. We move to a cash type of position and just collect daily interest. There's an ETF you can own. You just collect daily interest every day. safely sitting on the sidelines, waiting for that next set of waves. So it's a really slow, comfortable, low risk, low stress strategy, which is what I love about it. It fits my lifestyle, the type of
Yes.
lifestyle that I want.
So you employ a lot of patience, and so what you're saying is you're waiting for the proper setups, not rushing in, over trading, and things of that nature. When you talked about assets moving, I know what I've heard, looked into it, was Warren Buffett right now is in mostly cash, and he's treasury bill, T bills. What do you have any opinions on those, or what do you think about sitting in cash versus being a active trader, or I guess more talking about capital preservation?
Yeah, like capital preservation is the key. I mean, once you have, pretty significant wealth, the last thing you want to do is lose it. So I grew up, my parents, my dad retired in his 40s, did exceptionally well. We had a great lifestyle when I was in my 20s, but then he got back into the entrepreneur game, got into bed with more or less the wrong investors who were actually just shysters. They literally took the investment capital and vanished, like never to be found again. And
Wow.
we actually went through a bankruptcy from the top of the food chain to the bottom. We
Ouch.
lost everything. The only thing we had was our clothing and furniture. That's all you could
Mm.
keep. And I mean, it was pretty drastic. And my father actually ended up having seizures from stress. We actually thought he was going to die when we came across him on the floor, or actually he was in his bed. It was so scary. So I know how you can go from being successful and healthy to losing all your money and almost dying. So I take financial losses and capital
Mm.
preservation very seriously. It's been my number one thing growing up because I've seen how it can almost kill you, and it does kill a lot of people. Bear markets,
Yes.
recession,
Hmm.
people actually unfortunately take their lives in some of these scenarios. There's a lot of suicides that happened in 2008, 2009,
Yep.
about 6,500 people directly linked to falling stock prices. So it is a serious thing. We may be coming upon one again. And that is the whole point of why I'm kind of sharing what I do, is because we can avoid these and we can actually safely and conservatively profit from falling pricing if we know what we're doing. So that's kind of my whole focus on what I'm doing. And so cash, as you
Yes.
mentioned, I love cash. We sit in cash between all of our trades. If you accumulate all the time that we sit in cash and collect interest, we're sitting in cash 3 to 4 months of the year, which
Oh
some people
wow.
think
Mm.
cash is nuts. Why are you're wasting all this opportunity? I'm like, well, no, if things aren't favorable and they're volatile and they're risky or falling, we don't want to be in anything. I'd rather just make my third of a percent every month and watch my account inch its way higher while everyone else is freaking out during chaos and huge price swings. So there is nothing wrong with cash. Cash is king during certain parts, certain market stages. And right now, being heavily loaded in cash, outside of the stock market, I am very, very cash heavy. I am waiting for a financial reset. I want to get into real estate. I've got business ideas I want to bring online during the next
Yep.
cycle when everything bottoms. So I think cash is huge. And I think I'm a long-term planner. I'm a thinker. I have the patience. I'm like the stalker who, like the lion who can just kind of wait out and see things like that. So I love the game. I like to see things coming and I'll patiently wait. And if you're patient and you know what you're doing, you can do exceptionally well. The problem is people think they need to trade a lot.
Yeah.
Stats show that pretty much the more you trade, the more you're likely to lose. Uh, Buy and hold to me is really dangerous. The older you are, the more dangerous it becomes. There's a 50% correction you could take with your retirement capital, have to
Yep.
downgrade your entire lifestyle. So I think active trading, which is one extreme, is dangerous. Buy and hold, doing nothing, is super dangerous. And so asset revesting is right in the middle. We just catch a few sets of waves, like 5 to 10 or 12 positions a year. And we just get into those positions
Mm.
with our entire portfolio. We ride that wave and we carve off it, and then we wait for another one. And it is very slow. People think it's way too slow if you're an active trader.
Yeah.
And the passive investor says it's way too active. I don't want to do it. So it's, there's always money in the weird time frames or the asset that people don't know or a strategy that people don't know. So it's really a sweet spot. I've been doing this since 2001, this strategy, slowly evolving it over time. And I call it CGS, which is called the consistent growth strategy. Like every
Mm.
quarter, we're pretty much seeing our account grow, no matter if we were in a bear market or not. And that's what blows people's minds, is like we barely do anything, yet we consistently make money. And so I love cash, and cash is one of the core reasons why we consistently make money. Even when we're sitting in cash for a month or two, we still made 1% or so, while the stock market could have fallen 5, 10, 12%.
Yes, yes. I seen, was it in August, September, October was crazy. So what were you doing in during that period of this month or this year?
Yeah, so we played. We would move into the U.S. dollar or into a cash position. So there's a U.S. dollar ETF,
Mhm.
UUP.
Yep.
A lot of times, if the stock market's crashing, the U.S. dollar is actually rallying. And
Mm,
so the way I look at the markets is through a hierarchy. So I have got multiple assets. The US stock market is the most volatile, it's at the top of my list. And
yep.
then it looks at long term treasury bonds. Then we go to the currency and then we go to cash. And so as the stock market falls out of favor, we look at which asset fits the triggers and we have a trigger, it has to be trending in our favor, and we
Yep.
move into those assets. And typically, as the markets get crazier, we have to go further down on that list to find a safe asset. And as we go down those ETFs or those asset classes, they move slower and slower. They're lower volatility. So we can move into the dollar and it might only move 0.5% or 1.5% over a couple of weeks period. It's a nice, slow, trending, safe asset class. I love it. The markets can be falling apart and we can just keep inching our way higher. So that's what we were doing. We were either in cash or playing the US long US dollar because it was rallying huge. It was the play of 2022. Stock bond portfolio fell 25%. The dollar ripped higher and it's
Yeah.
a nice steady trend. And we're seeing the dollar do well again because I think we're going to see some difficult times come next year for sure.
Yeah, it looks like it. A lot of things are happening right now. Even markets today, it seems like every time Jerome Powell speaks at the Fed, something happens, which I think is ridiculous. So I
Yeah.
do just jumping around a little bit. You crypto did mentioned. Are you into crypto or like any forex, those type of trading or assets?
No, so I traded. I've done all the different trading through the years.
Hmm.
You name it. I've done covered calls. I've done options, sold options, and forex, futures, scalping, day trading. I mean,
Okay,
I've been doing
tried
this
it
for over
all.
25 years,
Yep.
and so I came full circle. I'm the type of person like I went to college for business administration, and I specialized in operations management. And
Okay.
my whole theory was I always wanted to get into a company. I literally want to start on the ground floor. I want to be sweeping the floor in the warehouse. I want to work my way to the top, become a CEO.
Hmm.
And I like to know every nut and bolt. I'm a very technical person, which is why my company's called Technical Traders. I
Yep.
like the nitty gritty, the devil's in the details. That's where the money's made. And yeah, so that's kind of how I kind of work through that whole side of things. But sorry, I forget what your question was there.
Oh, just asking if you are like really, what's your medium of trading? Is it full mostly options? But my question was like, did you touch crypto? That seems like a
Oh, right. Yeah, yeah,
yeah.
yeah. So, yeah, I've gone full circle. The only thing I haven't really traded is crypto.
Okay.
And I own some. I've owned some for a very long time, and I've never touched it or traded it. I just own a little bit
Buy
of
and
it.
hold. Hmm.
I'm not a fan of crypto myself. I like. I've just found my sweet spot is the stock indexes, bonds, currency, and cash. Those are the biggest, most liquid assets.
Yep.
They have beautiful waves, beautiful tides moving in and out. I don't like to get too much into individual stocks or sectors or individual commodities because they're a little more haywire. And then
Hmm.
you add crypto like Bitcoin. I watch it all the time. I do cover it every day pretty much for my followers, but I don't actively trade it, but everybody likes to know what's going on. And it's fast. I don't really want to own something that can open up or down 5, 10, or 20% like in a blink.
It
I,
definitely
I,
can.
I Right. So my whole theory, my strategy, why I like my strategy is because I can put a large sum of money into it, my entire portfolio, and then I can get into one. We are in one ETF at a time. We're either in the stock market, like the index,
Hmm.
or we're just in the currency, or we're just in bonds. So we
Uh,
literally have one position on. It's an ETF. You're in and out with a click of a button, and they're slow moving. It's not a yo-yo and has chaotic moves. I just want to move my entire portfolio consistently higher. I am not looking for grand slams. I'm not looking for huge gains. If you hit a whole bunch, if you hit, 5 or 12 first base hits of like 1 or 3% each time, you've
yep.
got an amazing year on your hands. People don't see that as exciting, but if you can do that, you are crushing it. And people don't realize if something is boring, which my strategy is, it
Yep.
means you have a system in place. It means you have rules in place. You don't have to trade by emotions. You're not swinging at the hip trying to do anything. When something happens, you already have an order in place to either take partial profits or to get you out of the trade. Everything
Hmm.
is like premeditated, pre-set up, And boring is good, but people don't like boring generally. They want to
Yeah.
go swing for the fences and own those hot stocks or commodities
Yeah.
or cryptos. And I used to do all that, and I just found if you just move away from volatility, focus on consistent, high liquid things. It just becomes very easy on the brain, becomes a lot easier on your pocketbook to navigate these markets.
Yeah, it makes sense. Like a lot of people got into NFTs and got wrecked.
Oh man, that was a short-lived little bubble. Holy
Yeah,
cow!
it came and it went and it's over
Yeah,
now. It's crazy.
yeah, it
Okay,
was pretty
so
neat.
yeah, so can we talk more about technical traders and like what you're doing with your students and how that process works? If anyone's listening, how would they get involved and things of that nature?
Yeah, so the way technical traders works is more or less I share everything I do with my own money. So I'm sharing my trades, my strategy,
Hmm.
and people can subscribe to it. And I do daily or weekly updates, video updates. I share my screens. I go over the charts, what's going on. I talk about all the intermarket relationships, the trends. So everybody has a really good feeling. Not only is it highly educational, but they also get the proper expectations of how trading and managing positions really is. The reality is you're not going to have massive, huge returns if you're managing your risk. Usually, if you got massive returns, you're taking crazy risks. People don't realize how much risk they're taking. So, I share my trades. I also provide auto trading. So, if somebody just wants my ETF strategies done for them in their brokerage account, they can actually just have that done. They don't have to go and learn anything. They don't have to follow anything. They can just have it running as a passive income stream, which is the reason why, we're on here. You're talking about passive income. It's
Yes.
you can take full advantage of the stock market without the crazy volatility. You can generate growth in upwards, sideways, falling stock markets because there's always one of our assets is going up or we're just collecting interest. And you don't have to do anything if you don't want to. And as you know, trading is super hard.
Yes.
It takes somebody literally, 10, 15 years generally to like really like be in the matrix, like be able to see everything moving and feel the ebbs and flows and have strategies nailed down. And so if you're not willing to commit literally your life to it and consistently stay on it and learn it, it's going to be a real battle. You need to get help to get the proper signals, and you need to really deal with your emotions. We did a survey with over 5,000 comments from both investors and traders a few months ago, and the number one thing among them all, doesn't matter if they were a passive investor or an active trader, they all said their emotions get the best of them. They have FOMO. There's a big move. They feel like they should have caught it. They make bad decisions. They get into winners. They don't take partial profits because they're like, well, why do I want to get out of a winner? And then, they don't get out of a loser because they're like, well, I still like it. I'm just going to hold on to it. I mean, it's just, I've seen this for 25 years. It's so frustrating to see people stuck in that mindset versus like, I tell members when we get stopped out, I congratulate everybody. I'm like, great guys, we got stopped out. That means we're following our rules. We're protecting our money. Now we can sit and wait for a fresh new trade. It doesn't matter if it's a stop that we took a loss or a trailing stop. We get kicked out of something that, had a big enough pullback from our partial profits. But anyways, that's kind of what I do. That's what I offer to investors. You can trade your own, follow my signals, have it done for you. I have a technical analysis trading course in there that is all included with like a subscription. And it's all about just managing and growing your retirement funds or your active trading account in a different way, a way that allows you to go live life and do other stuff and not be glued to the screen.
Yeah, respect, because when you're looking I'm in the US, and then like people's 401ks are taxed like crazy. They're getting rocked in every single direction. So a lot of us, I definitely know me and people I've been talking to, we're seeking people like you to keep us educated and to join these communities, because even jobs, a lot of the promise of jobs have not came true for most people. So that is why, again, like crypto became popular, is because people are looking for that fix on themselves. So again, thank you for doing what you do, because it's very positive. So can we talk to the new investors right now? For someone who's like never invested in the market, who's never trading, do you have any like insights or advice you can give them about how to get started?
Yeah, I think if you're brand new to it, you really need to look back, take a step back. The thing is, a lot of us want to become that active trader. I mean, there is
Yeah.
a natural pull.
Yeah, I'm guilty. That's how I was for sure.
We all are, and eventually in most cases, either people lose their money and they give up, or they hit the wall and they're like, oh gosh, this is way harder than I ever thought. I need to, buckle down and either create a strategy or follow a strategy.
Hmm.
So you need to realize, do you really want to spend, a new investor or a trader, do you want to spend the rest of your life really learning about the markets and staying on it, and then fighting with your emotions? Like you're going to need to create a trading strategy. And as you create a trading strategy, because a lot of people think they have a strategy, even newbies are like, well, I'm going to do this simple combination of moving averages or whatever it is, right?
Hmm.
If you start documenting your idea, you're going to realize how much you have no idea that you don't actually have a strategy. You're going to start to create all these rules. Well, what happens if this happens? And how do I identify this or that? And you're going to realize you only know like 2 or 3 points within a strategy that needs like 40 data points for you to safely navigate it. So if you're getting into it, if you want to create a strategy, document it step by step. Literally, I actually have a course on how to document your strategy, and you should be able to literally hand your strategy over to somebody new and say, okay, this strategy, try executing it and following it. And if they can find the trade, enter the trade, manage the position, exit the position on their own without asking you a question, then you've done a good job. But if they have one single question, then you have a void. And during that process, you realize how little you know of the markets, how little, how much risk you're taking, and how often that trade idea might actually be losing. A lot of people think naturally the idea works pretty well, but when you look at it over a long period of time, you're like, wow, this is a really bad losing strategy. It only works in a certain market condition and gets annihilated in another market condition. And so you need to realize you need multiple strategies because there's multiple market conditions. There's rising interest rates, falling interest rates, bull markets, bear markets, high volatility, low volatility, trendless markets, sector-driven markets. I mean, you gotta be able to, manage all this stuff and have a strategy that can weave through. Because if you pick 1 or 2 strategies, it might be good for even 10 years. Like this last bull market has been amazing. People made a fortune. When we go into the next major financial reset, they're going to go, holy crap. I don't know anything. I totally just lost all this money, gave it all back. I'm an idiot.
Yep.
That's what so many people do, right? And so just make strategies, have a game plan, figure out if you want to create or follow something that's proven. Yeah.
Makes sense. Thank you. So as we slowly start to close out, is there anything else you would like to share to my audience, or anything you'll let them know, please?
Yeah, sure. I mean, if somebody wants to kind of see how the markets move, I created an infographic. If people want to go to my website, which is thetechnicaltraders.com, they can join the free newsletter there. They'll get an email to download this infographic, a PDF, and it breaks the markets down into, there's 4 stages that the market moves. If you know what stage the market's in, you know what strategies to focus on. It talks about the emotional cycle that investors and traders go through who don't have control of their emotions. And that's very important to know what people are thinking and feeling, because we can take advantage of their emotional moves. And then I also talk about cycles, which sectors or assets fall in and out of favor at different times in these cycles, where your money should be moving to. And, knowing which cycles or assets are moving right now tells us, what's coming up next. And so if you put all these together, that's giving you price action. It's giving you the market sentiment. It's telling you where money is flowing now, and where it's probably going to be flowing next, and the trend you need to follow. So this infographic is free. You can download it once you opt into the list. And it'll be an eye opener for you to probably want to learn more, because once you understand how the markets move, the stock market really isn't that complex from the way that I attack it. We just find the sets of waves through the assets that we like, and you just wait for them to roll through. Once you know how to identify them, it's really not difficult. Trading can be as difficult as you want it to be. And a lot of people want to be technical and super active, and they make it complicated because it feels amazing. Been there, done that. I have now tried to peel it back to like the most basic possible strategy. Complexity usually fails down the road. It's all about simplicity. And that's what I focus on.
Yeah, less is more. That's what it seems like. Yeah. Well, thank you. Sure. Thank you, Chris. I really appreciate you being on the show. If you could just wait a moment backstage, and then I'm going to close out the show. Thank you once again.
All right. Thank you. Yeah.
Excellent. Hey, y'all. So that was Chris Vermuelen with Technical Traders. Make sure that y'all check out the website. He has gave y'all a gift there if you just opt in. A very insightful episode, especially for new investors. Make sure that you get educated, take your time, and get some teachers and learn as much as you can before you take your first trades. All right, y'all. It's C. Will here with the Passive Income Network. Appreciate y'all for tapping in. Until the next time, y'all, I'm gone. Passive income, passive income. Gold in my dental, thank God for my mental. Investor fundamentals, told my girl it was simple.